everybody stand by for Bob Iaccino. I'm looking forward to speaking to Bob. It's my Chicago trading warrior brother. So Bob, I just passed you the ball. Hope you handle it better than the Bulls do. I don't know how the Bulls are doing. They're even in the playoffs. So waiting to hear your voice, buddy, and share your screen.
The Bulls are done, Dale. Can you hear me?
Got you, Bob.
The Bulls are done.
Okay. They haven't had a team since Jordan anyway. So, Bob, it's really great to talk to you because I don't think we've ever met, but I know that our paths have crossed many times because you're familiar to me. I recognize you. I'm interested in your journey, and maybe there's something in common there. Were you in the business when the old Merc was above Union Station on Riverside Plaza?
No, that actually predates me. Not because I'm not old enough to have been there, but I was in a different industry, which is kind of
okay.
It's one of the interesting parts of my story. And yeah, I mean, I'm surprised as well, and I will be very surprised if at the end of this we don't talk about 25 mutual friends in 15 different places we used to frequent at the same time.
How about stumbling around on Rush Street?
Oh,
Maybe
absolutely.
Okay.
Absolutely. Ever since the days of a fake ID, so a long time ago. The days when you could go to it, we won't get in trouble for this, but the days where you could actually go to the DMV with your older brother's credit card and his social security card, and they'd give you an actual ID with your picture and his name. That's the way we used to do it.
Okay. All right. So you started in a different industry when I was a runner on the floor. So how did it happen for you that you ended up getting into the trading business?
I always think this is super interesting because one of the things that I miss about the actual trading floor is there's less opportunity now. There's still some, but there's less opportunity now for a person to get into professional trading from nowhere, right? From not having gone to an Ivy League school or been at the top of your class at a Big Ten school or something like that. Because what happened with me was my family actually had an Italian bakery when I was growing up. The original place was in Elmwood Park. The second larger reiteration of it was in Franklin Park, and I was
going to say Melrose Park because
yeah, it was
I know
one of the parks.
It's an enclave for Pisons.
It is. It's one of the parks. You're in Melrose Park, Stone Park, Elmwood Park, Franklin Park. It's all the parks. Okay. So I worked there. I drove a bread truck. I started working there when I was 11 years old. And what ended up happening is my father brought on some partners to expand the business, and they teamed up with a silent partner and threw my father out. So my entire family worked there. It was a growing business. It was about $4.5 million in sales. But if you know anything about food, you got about a 1% net profit in food. So it's not a ton of money for a bunch of families to live off of until you get to about 40 or 50 million. Having said that, I reached head of sales there when I was 19, which you can get through nepotism. But when my father brought in these partners, they essentially threw him out. So my entire family left the company, and I was sitting around unemployed for the first time since I was 11. And a friend of mine who worked at the Chicago Mercantile Exchange said, "Look, you're not doing anything. Why don't you come and hang out with me?" And I said, "Where?" And he goes, "Well, I work at Chicago Mercantile Exchange. I'll get you on the floor." I said, "Great." And I actually thought we were going to the merchandise mart. I had never heard of the Chicago Mercantile Exchange in my entire life. I went down there, fell in love with just the sort of vibe of it, the activity, quite frankly, the testosterone, the screaming and yelling. I'd been an athlete all my life, but as a 5'9" Italian, it pretty much ends after junior college. So having that whole experience, I felt like this was the closest thing you could do for a living to playing sports and possibly make a good living at it. So
did you start as a runner or a clerk?
I did. Well, I started as lower than a runner. The next day, my buddy invited me back. Well, I asked to come back, and I walked around begging for a job, and I got a job with a guy who told me my entire job was to get him coffee in the morning, get his lunch, and look for another job. He did not want me. He had no work for me. He just took pity on me, and that's what I did. And he told me if I ever got sprouts on his turkey sandwich, I was fired that day. So that's how I got my start down there. And it ended up, I started out from there as a trade checker / runner in the yen pit. And then I went into the Eurodollars after that. And I spent time at the CBOT. I ended up being an assistant strategist at a Japanese firm. And then I went from there to being a chief market strategist, briefly at Smith Barney, and then at a German bank called Commerzbank, which is still in existence. They were Germany's 4th largest bank at the time. I think they're 6th now or something. But they're still in existence, and that's kind of how it happened. It all went downhill from there.
Yeah, and you're also a contributor on CNBC on Futures Now, so I've seen you there. And why don't you tell us a little bit about what you're doing with your latest creation at pathtradingpartners.com. I went there. It looked like you had a lot of information about cryptos, but you have Canada up here. So why don't you tell us what you're doing there, and maybe even go over your setup, what your vertical dotted lines mean to you, cycles, etc. Tell us what you're thinking about Canada and what you're doing with your new venture.
Well, so the Canada chart is a pretty good example. I'm going to go over Canada, and then I'll go over the yen as well. But what Path Trading Partners is a boutique analytics firm. We actually do in-house white label analytics for several institutions. Smaller institutions, it might even be a stretch to call them institutions, but when they need either geopolitical or technical price analysis or even fundamental analysis, we do it for them. So one of the clients that I can mention is a company called Basis Capital, which is an overseas FX cash broker. They do over the counter, they do CFDs, they don't operate in the US.
Okay.
So that's one of the firms. And then I do some things for the CME group. I do some things for the North American Derivatives Exchange. And Path Trading Partners is sort of the company that represents that. You see cryptos on there because I also am a part of a company called blockfills.com. Now, the .com is just to give you their website. It's blockfills.com. But what Blockfills is, again, it's a boutique shop where we do large-scale crypto buys and sells for high net worth individuals and family offices. So the minimum account size at Blockfills is 50,000 US. So we do a lot of crypto analysis for free though on YouTube through Path Trading Partners. So we are big believers in cryptocurrencies as an asset class going down the road. I don't like to particularly talk about which crypto I like because I think, personally, I think Bitcoin is MySpace. I think there's a Facebook that's coming. I think there's going to be a cryptocurrency that surpasses Bitcoin and actually is more effective than Bitcoin. But for now, Bitcoin is the king, and just like MySpace was for many years, when Rupert Murdoch bought it for $600 million and it subsequently went to zero.
Does this crypto phase that we're in, Bob, with all these ICOs and a lot of them are junk, remind you kind of the dot-com phenomena going into 2000 where there was a lot of trash, but after the dust cleared, we ended up with giants? Yeah,
very much so. I mean, people talk about cryptocurrency being the internet bubble. The whole blockchain is the internet. That's the way I look at it. The blockchain technology is the internet. People can fight it as much as they want, but blockchain technology is going to take over 85% of what we do in our daily lives. Cryptocurrencies themselves may or may not be valuable going down the road. I personally believe more in cryptocurrencies that have an infrastructure around them. So in other words, they're a unit of barter, so to speak, within a universe or an infrastructure. So there's places that are doing that with, for example, venture capital. There's places that are doing it with medical information and medical purchases where they have their own coin and you can be in their network and use their coin to purchase prescriptions and things like that. Those are online. Things like that, I believe, are going to survive. So yeah, you're going to have the best thing that can happen to the altcoin space right now is actually punishment for some of the crap. And the SEC is starting to come down on that. They're probably going to start next month from the people I talk to, that they're going to start coming down really hard on fraudulent ICOs. And the ICO is an extremely valuable tool, and I'm a huge fan of it. It's just a lot of people don't either have the ability, the time, or the desire to do the due diligence you need to do to get involved in a correct ICO.
Some of these ICOs remind me of like Pink Sheet stocks,
Agreed.
bulletin board, and I'm wondering if they're going to do the same thing that IR, investor relations firms, did for Pinks, where you actually pay people to come in and produce volume so that you could unload some of your paper.
Well,
are you seeing any of that in the crypto space?
yes, and that's an excellent point, Dale. I hope your listeners appreciate you bringing that kind of thing up, because again, when I say you don't have the time, the ability, or the desire, by ability, I don't mean you don't have the brains to do it. When you look at somebody like Kyle Bass or Carl Icahn, or these guys that go in and they buy a bunch of shares of something, or they get shares in an IPO, that's because they've actually gone to the company and watched operations. You know, you'll hear some of these larger firms, especially with their analysts, they say, yeah, we went in, we talked to the managers, we toured the factory. We don't have the ability as everyday people to do that, and no one's going to let us in. So if you're looking at an ICO that's based in, I don't know, the Ukraine, you're not going to be able to go in there and see if they actually have the operations they're saying. But people get so caught up with this idea that they're going to buy at 0.2 cents and sell at 1 cent, and make 80% on their money. It's just, it's too tempting for most people. And I would advise that people stay away unless there's a reputable person involved.
That's probably the spread, 2 cent bid, 0.2 bid, and one offer.
One offer, right.
And the market maker makes 0.8 cents.
Right. So, I mean, unless there's a reputable person involved who stands to suffer reputational damage, public reputational humiliation, or you can actually go see what's going on with that, you should probably stay away from ICOs, wait for coins to get established, wait for them to be vetted by institutions and professionals. Right.
Great advice. All right, let's get back to the loony here, buddy. I do tangents in my interview.
It's okay. I love tangents.
Okay,
huge fan of tangents.
Okay, so what are you seeing here? Canada, a lot of people thought that rally to 131 was going to be a failing rally. It turned out, a lot of Canada bulls or USD CAD bears are looking for lower levels. Crude's been strong. Do you include what's happening in the oil market because Canada's a natural resource currency? Do you use that correlation to trade it, or trade it as an individual entity?
Well, so crude is one of my favorite things to trade. It really is. So I don't particularly care for correlations that much unless you're in a situation where the margins on crude oil futures is too high. And then you can go and look at something like Canada. But I would caution people down the road that unless we build more pipelines in the U.S., I spent 2 years in an actual physical crude oil firm deliberately because I love trading crude oil so much that I wanted to learn more about the physical side of it. And crude oil travels down a pipeline at about 11 miles an hour. And we don't have enough pipe to take advantage of all of the oil sands in Canada that they're pumping up right now. So there's a lot of storage there. And the spread between WTI and actual Canadian crude, which used to be just the cost of the pipe, and that's it.
It's like $10, $20 discount up there, isn't it?
Exactly, because they have to allow for people to pay for the cost of the pipe. And the cost of transport generally. So what you do when you buy Canadian oil is you pay a price minus pipe. That's what they call it.
Interesting.
But pipe can be a railway, it can be pipe, it can be whatever kind of method you can get. It can be trucking, which is not used anymore, but any sort of shipment. So when you're talking about Canadian oil, you might end up in a situation where crude oil continues to rally and Canada doesn't, because you have too much of a discount for the Canadian producer to continue to pump. Just simply because we don't have enough pipeline. And you saw CSX yesterday, which is a train company.
Right.
They ship a lot of oil. They doubled their profits from the last quarter. That's unheard of. And that's because of the demand for rail cars to ship crude oil. That's one of the main reasons. So as the crude oil price goes higher, they want to pump it out and they want to deliver it. So it's an important distinction to know that. So for me, I know the trade is crowded, but I remain a dollar bear simply because of this. And that's part of the reason I pulled up the Canada chart, and I want to pull up the yen chart as well. The dollar is driving these trades more so than the economies of the underlying countries, which is often the case. I'm not telling people anything they don't know. So what I look for, I'm going to give people a little bit of, the moving averages you see up here is the 50 exponential, the 8 exponential, and the 21 exponential. And I use those for a very specific reason. When the 8 and the 21 are on a steep downward angle like this, we call this a rotation zone or an R zone. And if you go to Path Trading Partners, there's actually a course there. We don't sell a lot of education, but we do have it available. I think we sold maybe 10 last year. We don't really, it's not really our business. But people ask us and we don't really have time, so we put it up there. There's a course called the R zone in our store at pathtradingpartners.com. This is the R zone. So what we look for is we look for a first cross, which we got right here. I think you can see my cursor, right?
Yeah, got it.
Okay. And then we get a rotation up there and a sell-off and a rotation up here, and I'm expecting another sell-off. You're seeing the moving averages starting to flatten, and we have a way of looking at that. Now I have the 50 up in here because oftentimes what happens on the third or fourth cross, if we come off of a choppy period like this, is the 50 will cause resistance to cause us to go back into the R zone. So what I'd be looking for here is some sort of best fit trend line at an angle like this. And I'll just kind of draw one here for now. It won't be the exact one I'm looking at because one hasn't developed yet. But I'll be looking for a best fit trend line that fits right around here somewhere. And if I can get a full rotation into here and then a break of this trend line, I'll go short again on the dollar candle. All right. So that'll be the kind of thing I'm looking for. And what I do, Dale, is I have a fundamental opinion about something, and then I look for price action to support it. If I don't have a fundamental opinion, I'll still trade the price action if it's perfect.
Okay, well, you know, that's a great segue because a lot of people have been fooled by dollar weakness during a rising interest rate environment. They're saying, you know, everyone, we had a, you know, down 12% dollar last year. It's not doing, you know, not bouncing at all with what the Fed is doing. How do you explain that correlation with the dollar being weak, with rates being higher here than anywhere in the world?
In the medium term, the dollar will be driven more by longer term rates and inflation than it will by the Fed. Believe it. Now, in the short term, it gets driven by the Fed. The Fed is on a 3 rate hike path for 2018. 80% of the members of the Fed voting team, as well as their the non-voting members, believe that 4 rate hikes in 2018 is more likely than 2, but they're still on the path of doing 3, considering they've already done 1. Okay. So what we're missing though is inflation, and that's why you're seeing the yield curve start to flatten.
Right.
The longer term, the longer term rates, there's an issue with the longer term rates right now, and that's that there's no inflation. We've seen the yield curve from say 2s to 30s go from 80 to 70. We see 2s to 10s go from 61 to 50. That's a scary situation, and something has to give there. And if the economy slows down, what gives is the path of rates by the Fed. That's what gives. So the Fed will back off.
Any thoughts on the squeeze that we've had in LIBOR? And remember, in the old days, Bob, we'd have the TED spread to give us market messages about flight to quality. And during the recent equity sell-off, we really saw no flight to quality into bonds, and LIBOR has been really squeezing people. I mean, hasn't it tripled in price in the last 6 months?
It has. LIBOR to me is more of a technical function. It's more about the lack of lending and credit that's going on, and it's part of the reason. So I don't particularly pay attention for our purposes, but part of the reason it's happening, I was talking to a friend of mine who works at Mitsubishi, and he was saying to me that they are struggling almost every day to do just their regular funding. So it's more of a function of that, and LIBOR is going to suffer because of it. The Fed just came out with SOFR, which is a new version of this sort of intraday and monthly rate. And now they found a technical problem with that. The whole reason for that was to keep LIBOR in check, and now they have a technical problem with that. So I think it's more about the banking system fixing what's going on with LIBOR right now than anything economic that it's telling us.
Because doesn't it mean that banks are unwilling to lend to each other, and that's what's forcing LIBOR?
Correct. And again, that's a credit function. And the reason the Fed is getting involved is because they did their bank stress test and they say everyone's okay, but bank to bank doesn't buy it. And you know, we're seeing subprime come back.
That doesn't do a lot for money velocity.
Exactly. It slows it. So,
right.
And again, No inflation, right? So generally inflation is driven by the velocity of money, not necessarily the amount of money, but how quickly it's moving, and it's not moving.
Right. Okay, so we're looking at
point.
the yen here. Are we in the, I see the line flattening here, and kind of a similar situation to what you had in Canada. So you have that little uptrend line. You would now wait for a break of that trend line to enter short positions?
Yes.
Or
So
would
what
you
you're
sell
seeing
a rally?
I would initially sell a rally against this area, probably if we get a pop above, and get out above the 50. But my normal entry is going to be a break of this trend line. I prefer if it goes up in here and tests, but this, what I call significant level right here, which generally, just for a quick explanation of what we call significant levels, it's a repeated test of a level by emotional candles. And these are emotional candles. Okay, something like this, something like that, something like these two right here, V-shaped reversals, things like that. I don't just do typical support and resistance, as you know, you can find them every 20 cents. So I look for something more significant, and I look for it to line up with the R zone. That's why I wanted to start out with the Canada and then switch over to the yen, because right now it is, this significant level here is lining up with the R zone. So I don't like that the R zone is flattening out, so I won't sell this rally. If it were still a steep R zone like it was here, I would. So what I'm going to look for is a test of the significant level and then a break of this trend line. This wick right here is enough of a test for me. Okay. So if we get through this trend line, I'll have a first target right in here. Okay, and then I'll have a second target down at the end of this move right down here.
Okay, so yeah, you know, I don't know if you went through it, but you know, I always tried to get the edge and get the best price, but I've learned over the years that better to be a little late and have confirmation than try and top pick or bottom pick.
What's interesting, Dale, it's something I come across a lot. I'm glad you brought that up. By the way, this is a weekly chart, so this would have to be a Friday close.
Yeah, I noticed you brought your telescope.
Yeah, and the reason is, and you just kind of hit on it. Ever since we've had HFT, okay, and I do a lot of work with the CME group, right? I speak on behalf of them, and you know, I talk to those people a lot. Yeah. So, sorry, I just hit the cough button there. I'm playing a little hurt today. Okay. There is an absolute unbelievable amount of high frequency trading that goes on in futures and FX and in equities. Everybody knows that. The way to beat them is not with 1 minute bars or 5 minute bars. It's not to try and beat them at their own game. Okay, that's like going in with Mike Tyson in his prime and trying to outpunch him.
Yeah, that's a pearl.
It's just not going to do it. So what I have found over the years, and I left the trading floor in 2003, moved out to Los Angeles and reinvented the way that I trade, strictly for this reason, because you know, Dale, you used to be able to hear things and know what to do without actually knowing what was happening. You'd hear a certain sound from the roar, or you know, just cells.
When they were electing stops.
Exactly.
Yeah.
So I wanted to get away from the trading floor and get away from that stimuli and figure out a different way of doing things. And what I learned is that the more you shrink your position size down and pull your duration out, so lengthen your duration of trades, the higher your probabilities go, the higher your win percentage goes. So that's really one of the biggest things I can tell the retail traders. Stop thinking that I want to trade for 2 hours in the morning and then I want to go to the beach. It's more about I want to put on 2 or 3 trades a week and then go to the beach. So for me,
let your trades breathe and reduce leverage.
Exactly.
I mean, I say this, Bob, if you can't be wrong for a day, how can you be right for a week?
That's a great line. So I might sell this around I don't know, where are we at right now? So I might sell the yen if I get a Friday close below this trend line, and that might be as far as about 106.5. And I might hold that all the way until about 112 before I get out of it. But what I'll do is I'll have a small size, you know, in FX, we can use the micro lots and the FX cash.
Right.
And people get sort of, they get offended by the micro lots, but I can do 1,000 micro lots. It doesn't bother me. I mean, it's like it's just like going into the gym and lifting too much weight and hurting your tendons. It's just silly. So I'll
do more reps instead of maxing out.
So I would rather have 9 different positions of 3 to 10 micro lots each that are going to all last about a week to a month than try and get in and out over 2-hour sessions and just get myself chopped up.
Okay, Bob. Bob, you know what I'd like to wrap it with, since, you know, the S&Ps have been a one-way train for a long time up until February, and we had that big break, and curious as to what you think is going on here. I do know some people that are, you know, say the bull market has another 1 or 2 years to run, maybe until late 2019, and they're looking for much higher levels, some, you know, up in the 4,000 range. Do you think that this double bottom has to be taken out before the bull market reasserts itself, or are we just going to go from here? And what are you telling people now that, you know, I was trading bearish ETFs, and the last month or so, I really can't stomach having a good close by, you know, the regular session, and then having headline risks take the S&Ps down 40 handles based upon a tweet or a report by Mueller or anything else. I mean, the overnight action is just, you know, I can't stomach it right now. I'm doing other things. What's your view on this for longer term investors?
So I'll put it this way. My role is not to be political. My role is to analyze what the politics means to the market. So
exactly.
Having said that, I'm not going to give my opinion of this particular president because it's not important. One of two things is going to happen. There's either going to be a result from this investigation or there's not. As long as this particular president is in office, I'm going to say the S&Ps are going to make a new high. I'm going to add on to that I think 2018 finishes positive either way. There's a set of 3 circumstances that over the last 50 years has caused a positive S&P at the end of the year 48 times. 48 out of the last 50 times that this 3 sets of events have happened, we've had a positive finish, and that average positive finish has been up 11%, not adjusted for dividends. So I'm going to go on record as saying the S&P will be higher at the end of the year than where it opened. Now, you guys got to remember, it opened, we're up on the year now, right? Because here's December. Right? So we're now finally back up on the year. So that's not necessarily saying much. We don't have to make a new high to be up on the year.
Right.
But if for some reason President Trump is out of office, part of what's driving the equity markets, obviously, it's threefold. It's been easy money from the Fed. It's been regulation being pulled back, of which there have been a ton. It doesn't get mentioned enough, but a lot of regulation has been rolled back. And is the tax cuts for the corporations. Whether those things are ethically or morally correct doesn't interest me. It really doesn't. But that has been driving stocks higher. It's driven earnings to what we're going to get about a 20% blended earnings growth rate this quarter. That's huge. I don't know that that's repeatable, but it is very big. And so at the end of the day, stocks trade off of earnings. Whether that helps Main Street or not is, again, I don't say this in a cold-hearted way, but it's not of interest to me because it's not my job. I'll talk about those things at dinner with my friends and family. But this, for our particular purposes, if President Trump remains in office through 2018, and it does not look like he's going to be impeached or thrown out of office or even arrested, equities will be higher. If that flips, the tweets and all those things, they're short-term. You should buy dips on tweets. Unless a tweet is like, you know, I wear a large in my prison robes, that's a tweet you should pay attention to.
Okay. Well, yeah, what a great interview, Bob. You know, I'm so glad that you accepted my invitation. You know, I knew you were going to be a guy I could talk about any market with, that you'd have everything on your radar, and really appreciate your time today. And now that we've met, you're my trading warrior brother. I'd love to do this again down the road. You want to show your website?
Sure.
Before we, you know, say goodbye, so people know how to get a hold of you. I know that Bob's Twitter handle is at Bob_Iaccino. That's IACCINO, and his company is at Path PATH_trading. So if you want to show your website,
sure.
You know,
I'm going to show you. I'm going to show you 3 websites in 2 quick seconds if I can.
Cool.
So here's Path Trading Partners, and here is all of the cryptocurrency stuff. My partner, Mike Arnold, does these videos, and he is way better than me. I'm not kidding. In terms of price action analysis and stuff, the guy is absolutely just deadly. He's so good at it. Mike he's got a heck of a resume. He's a hedge fund consultant. He was a market maker at the CBOE, and he also helped start the Swiss options exchange down in Switzerland. So he's just got a ridiculous resume. He's an absolute trading robot. So this is Path Trading Partners, and here I said if anyone is interested in the store right here, the training of the tools, that's where you get it. We also have a podcast called the Money Path Podcast that we record. It's released over the weekend. It's very free flowing. We're not very strict on it. We pick on Elon Musk quite a bit. Then I'm going to show you this other site called trendytrade.com, which I'm also a part of. This is aimed more at millennials, but this essentially is we assign a bullish or bearish score, and we have all markets on here. We have Forex, we have stocks, we have commodities. If you go to F.A.C.E, you'll find cryptocurrencies on here as well. This is an infographic style. So if you go to, let's say Procter & Gamble, for example, you click on it, and it's every bit of information you need on the stock, where it is overpriced versus their sector, all the tweets, all the twits. One of the things I find interesting here is the seasonality factor of stocks and commodities. It's something that, if you'll indulge me for 2 more seconds.
Yeah, go ahead, buddy.
If I put crude oil in here, for example, this has been one of the things that has baffled a lot of people. But if you see any of my TV interviews, you'll see that I've talked about this quite a bit. Let me just go to the commodities.
Do you think there's a hot conflict brewing in the Middle East?
I don't. Okay. I'd go a little bit too much into conspiracy theories if I told you why. But I believe that things like the missile strikes are they're pretty accepted by everyone. It's not something.
I just was kind of thinking that Iran, quiet things down with North Korea, have a deal because we couldn't deal with both of them. Decertifying the nuclear deal, having a guy like John Bolton in the cabinet, a lot of hawks, and the President Trump's first visit was to Saudi Arabia. They're fighting a proxy war in Yemen, and more and more action in Syria between Israel and Iranian forces. So I don't know.
The reason I say no to that is not because I disagree with anything you've just said. I just think that when you get the 3 powers, China, Russia, and the U.S., when there's an attack, all 3 know about it. It's kind of cleared with everybody is the way I look at it.
Right, okay.
But it definitely could spark. I'm more worried about Yemen, Saudi Arabia than anything else.
Yeah, okay.
So what I wanted to show you is I unchecked everything except commodities, and I went to the crude oil page here. You can see that the sentiment is 73% bullish based on news stories, stock twits, Twitter, everything that's out there. But look at the crude oil seasonality. This is something I've been talking about on my TV interviews, where everybody has said shale is producing, but this is 20 years of seasonality, and this is very steep because crude oil almost always goes up during this time period.
Driving season.
Yeah. So, and then the last one I'll show you real quick is the block fills. Again, this is more about family offices and the like, but this is the other company where you guys could find me. It's over-the-counter cryptocurrency trading for high net worth. So, but Path Trading Partners is where you guys can reach me if you want to hit, remember, support@pathtradingpartners.com. That's where you can email me, or you can hit me up on Twitter anytime you guys want.
You've got all bases covered, buddy. Go Cubs.
Go Cubs. Let's get them going again.
All right, buddies. It was great talking to you, Bob. I hope that pips rain down on you and your partner and everyone you do business with. So
happy to be here, Dale. I appreciate it.
Thanks for your time, Bob.
Cheers.
Good hunting, my trading warrior brother.
I appreciate it, Dale.
Remember, above all, don't just count your pips, count your blessings. You're welcome, Kareem. You're welcome. I encourage you to follow this gentleman. He's a Chicago trading warrior brother, and if you listen to him, you probably learned and were edified today. So see everyone tomorrow for TGIF. Thanks again, Bob, and enjoy the rest of the day, everyone. See you tomorrow.